What you're about to watch is an experiment of a podcast while flying to a destination. What I would love for you to do is leave me a comment down below if you liked what you saw. Should we do it again? And if you want to join me and potentially be on the jet when we go travel to look for real estate, check out the first link in the description down below as well, right next to that expiring coupon code for the programs on Building Your Wealth. Let's get started.
Welcome to the first ever Mile High podcast. We have absolutely no expectations for this whatsoever, but we are so excited to share real estate and macro with you today. So, to kick us off, I am going to ask a question and then we'll get insights. So, the first question is a question that I get in the comments every single day, which is, Kevin, why don't you just Zoom for real estate? Why are you traveling for it? Since y'all have been with me for the last few days, I'd like your insights before I give any of my insights. How about we start with you?
Okay, well, it's one thing to see the specs of a house, but it's definitely way different to see the whole neighborhood in person. And especially with some of the older neighborhoods that we saw, how much it can change from just one street to the next. And to your point, like until you've been somewhere 3, 4, 5 times in the exact same neighborhood, you don't know what you're really signing up for. So I think just being in person is invaluable.
What about you?
Your turn. Yeah. So I mean, adding on to that in-person experience, talking with the local community. The other day we were in Salt Lake and we talked to that barista, super nice guy. He told us the lowdown about every single little community, every single facet of that community. And we were in that sandwich shop too. I mean, you were talking with the owner. Stopped the guy who was buying a sandwich, asked him about, he told me there's some fault line, which you would have never, learned about. And I mean, it's probably not, a big deal or whatever, but you get like these little facets, these little understandings that you could not get online because you wouldn't even know what to search for. So yeah.
How about you guys back here? You haven't gone with us yet. Welcome aboard, by the way. We'll have to ask you after today. Go ahead.
Yeah, building on what Tristan said, it is really cool how we can meet the community. Like when we were in Gilbert, Arizona, we were able to meet with McKay's family who's lived there for a while and really just talk with the father and understand the real estate. He was telling us about the Airbnb rentals, which was really insightful. So when you have that over the course of multiple visits, you can get a much better idea of an area, whether it's investable or not. Like Spring Valley, glad we visited because now we know that that's not something.
Yeah, it's a really good point. When we visit an area, it's easy to look at specs online, and I think that's what a lot of institutions do is, let's do the macro survey, let's get the Adam real estate data, let's get the median incomes and the median rents and see where can we get the highest cash on cash return. But when you're actually there, we're like, wait, we want to be on this street because that street might appreciate more or might attract longer tenants, more longevity for our tenants, which that helps us operate more efficiently. One of the things I always look for is how can we get a higher quality tenant so that way one property manager can manage 300 rentals instead of maybe the average of 50 rentals at a BlackRock or Invitation Homes maybe. So if we can get that operational leverage because we're buying higher quality and we know what the locals desire, that's a lot easier to do in person because you're seeing it. You're understanding why. So when deals come up, you can act faster. I see a lot of out of area folks. They study everything they can online, and then when it comes time to finally pull the trigger, they also don't have the confidence. So they miss on deals after deal after deal, and they're always frustrated. Why didn't I get a deal? Why can't I buy a deal in real estate? Well, because you're not there. You don't know the market, and the people don't know you. See, when you're there all the time, the listing agents know you, the buyer's agents know you. They're like, that guy's always here. They know this is a good deal. And when they know that you know it's a good deal, you get ripped off. No, I'm just kidding. No. I mean, in competitive environments on good deals, you want to have everything going for you, that they're confident in your ability to close the deal. What do you think back here? Are you working on something else? You want to be part of the Mile High podcast? You want to keep working? He doesn't want to be part of the Mile High podcast. Okay, works out. Fine. Fine then. Back in the toilet for you. So, okay. So, what about, so that's for exploring real estate. What are some of your initial perceptions of the real estate market So I know some of us have been studying it, but I'm curious, even I'd like to start with you, sort of your thoughts. You just bought, when did you just buy real estate? Maybe you could tell us when you just bought real estate, the Airbnbs you're doing. Tell us a little bit about your situation, kind of what you think about the real estate market and your long-term plans.
You don't want to ask me. I bought at the peak. No, I'm just kidding. Yeah, I just bought a property back in October, and that property now we worked on, and we just got it up and running in December. So very little data at this point, but so far it's been pretty good. And I mean, we bought in Las Vegas. It's definitely high traffic area. Everybody's coming to Vegas still. I don't think that's going to stop anytime soon. People like to gamble. People like to party. So yeah, that's definitely going well. We also bought in Palm Springs. That's another place that, you know, we really like, the desert area. You know, it's cold everywhere. So people are definitely wanting to go somewhere where it's a lot nicer in weather. So that's primarily what I've been looking at, is just places that people will always want to go to no matter what time of year. And, you know, that's just kind of how we're focusing right now. But yeah, I mean, I'm happy to join you guys. I didn't even consider Washington prior to this, so this is going to be a cool experience.
What kind of returns were you expecting when you went into the properties that you bought? Is it something where you saw, okay, we're going to pay X dollars for the property and X down? What kind of rents are you thinking you're looking at if, let's say, you have that 50% vacancy factor for Airbnb? Or what are some of those numbers that you're at least projecting and thinking about outside of what actual prices do for macro?
Okay, see, I guess that's where it's like, you know, like more of like a personal thing. Like everybody kind of decides what's the best fit for them. Yeah. And since I've been watching, you know, me, Kevin, and I definitely follow along, I kind of wanted to use the whole wedge deal as like kind of like a basis point. If you get a wedge deal and you have a good deal on the property and your mortgage isn't something too outrageous, especially right now with interest rates, you have a little bit of room there. So like you said, you have room for that 50% vacancy potentially. You just never know. And so you can kind of protect yourself a little bit, have a little bit of insulation. And that's kind of what we did with ours. It's like, for me, I'm okay as long as the place is producing enough to take care of itself. I'm not coming out of pocket. And then, you know, when things pick up again, you know, hopefully that'll help out.
That's awesome. Yeah, I think one of the big things that I always advocate wedge deals for is this idea that you have insulation. So even if the market, it doesn't almost really matter that you try to time the market at the top or the bottom or what just matters is that whenever you are buying on that cycle, you're buying maybe 10, 20% below whatever that line is. That's your insulation. So if you've got fluctuations, big deal. The odds of you going upside down, especially with a down payment, very, very little in that case. We'd have to see something catastrophic. And in that case, we'll probably have bigger problems. That's what I always say. People always come to me, they're like, oh, Kevin, you know, well, what if the world ends? Then I'm like, then I don't care about my real estate anyway. You know, what if we go, it's World War III and we got nuclear war? I got bigger problems than worrying about my real estate values at that point. So earlier we were talking about macro. Tell me a little bit about your thoughts on the macro cycle.
So for the macro stuff relating to real estate, I mean, I think it's without a shadow of a doubt that there's been a change in the secular trend up to more of a trend down. I mean, essentially, yes, a trend down. You know, all throughout the country, already a bunch of agents that we visited and stuff, you know, from Little Rock to Salt Lake, you know, here in California, prices are all saying the same thing. Prices are going down, will probably continue to go down. The question is how much, the magnitude at which they go down in the specific area. And I mean, that's why we're, you know, flying everywhere to really trying to find the good sustainable markets that we see growth and, you know, potential in, and we see value, like a wedge deal within of a city itself, you know, essentially. So, but I mean, the derivative of all of this secular change is, I mean, macro, the meme or whatever, right? But it comes down to interest rates. I mean, whatever Powell has said he has done since fall of 21, he said he was going to raise it. You know, there's a lot of Fed speak, but, you know, eventually he actually did it. People were saying he's going to pivot, but he kept on sticking with it. You know, it becomes a hot topic. And I guess the big debate over the big macro, like we were talking about earlier, is, you know, will he actually pivot? And if he does, what will happen with rates? Do they go negative like we see in Europe and Germany, like you mentioned? I mean, what'd you say what'd you say about Germany recently?
Yeah. Well, before the COVID pandemic, Germany went to negative rates on savings. And we were talking about, wow, there is the possibility that the world goes negative again certainly within our lifetimes. I think honestly within the next decade, which is wild. But earlier before we started the Mile High podcast, to catch everyone up, we had this thesis that the bond market's already pricing in, based on the depth of the inverted yield curve, is already pricing in 500 basis points of cuts through this cutting cycle. We might not even get to 5%. Right now, the yield curve, the projected rate peak is sitting at 4.82 from what at least the terminal showed this morning. 500 off of that, we're already negative just based off what the bond market is showing. I mean, that can fluctuate. Bond market's not perfect, but boy, I would rather watch the bond market than the stock market over the last year.
Yeah, if I could add on to that, I mean, essentially the bond market that's where the money is. That's the most money. I mean, factors times bigger than the equity markets, and these are the guys who are managing pensions. All the money that 401k is going to, everything, wealth managers, it all gets funneled eventually into the bond market. And the guys, there's a small number of guys, not small, but I mean proportionally small number of people who really trade the markets, manage the bond markets, and these are smart people. You have someone like Jeffrey Gundlach, billionaire, a bond market fund guy. I mean, if you're interested in learning about the bond market, he posts his stuff on YouTube, like his thoughts straight up. Yeah, you have people like that really saying, inflation is going to come down dramatically, and he's not only talking the talk, he's walking the walk by the way he's managing the money. And the bond market itself shows what the consensus bond managers believe, and what they are pricing in right now is that's a definition of an inverted yield curve. They think it's going to eventually pivot. So what do you think the long-term effects on more like society, political things would be if rates do go negative? And how do you first the problems, Kevin, that you think would arise from that, and also some solutions to those problems?
I think the first thing that we immediately think is, oh, that's it. The Fed's going to collapse. The dollar's going to collapse. It's over. U.S. dominance is over. U.S. dominance isn't going anywhere. We're twice the size of China. China's probably in a depression. Dollar strength might weaken and ebb and flow over time, but for at least the next 20 years, I think the United States is a dominant economy to invest in. So what I do think is a risk is that we face more of a Japan problem eventually. Maybe not soon, but maybe our 30s are like their 90s, right? So I do believe after this recession, we will return to growth and substantial growth. But there is that possibility that in the 30s we move into that Japan 90s. And what that really was such low growth and negative growth that you had a Fed, the Bank of Japan, lowering rates to negative levels and not causing inflation. And I think that's why our Fed so much so thought, wow, inflation rates have been coming down for 40 years. A little bit of money printing won't hurt. Now, clearly we learned that in the short term, we could definitely print our way to inflation. So I actually think that's good news. The reason I think that's good news, which sounds crazy right now, is it delays when we would ever face the Japan problem. See, Japan has printed money for decades and has not created inflation. That's the problem. They have, it's almost like they've lost their sex drive to relate it to that. You pump them up with more and more Viagra, it just doesn't work. If they can't get the PP up, the pricing power doesn't go up. It just stays small. And that's a sad life when there's no growth. So the fact that we were able to pump it a little bit and we got a big explosion of inflation is actually a good sign that we're still healthy and human. So we still have, that's why I think we've got another big boom cycle ahead of us for the next decade. Then we wonder, okay, is there a risk where now we slowly start trending back to that great moderation? Now we go negative, which we never quite were, right? I mean, mortgage yields fell to a low on the 30-year of 2.7. Germany at the time had gotten to, I think, 0.9 or 1.2, somewhere around there. Really incredible. I was calling my family in Europe and Germany, asking them, can you borrow? And I borrow from you and we arbitrage this. Wow. This is too good to be true,
Were you able to?
Then COVID hit at that point. Yeah. it was game over, you know? It's like, do we even want to buy? You know, I remember the panic of that. But yeah, it was just remarkable how, I mean, they were starting to charge, I was going to say earlier, charge for deposits on savings in Germany. And so I actually think this is great. In as terrible as it is, there is a silver lining to it. I shouldn't say it's great. It's more of a silver lining that we did have this inflation, because it gets us away from that Japan for a little longer. It keeps that dominance, that U.S. growth for quite a while longer. So I think the stories of the Fed's going to collapse, the dollar's going to collapse, way down the line, and therefore the problems are really way down the line. I think for now, let's let inflation cycle down, which a lot of folks don't recognize how that works. That's another thing we were talking about earlier, is this idea that, look, inflation's at 6.5% now, and you have people all over social media saying, well, my food's not getting cheaper, right? Well, and they're like, my food's not getting cheaper. How is inflation going to go to the 2%? Well, that's actually the point. If your food stays the same price, inflation is zero. Yes. You just need that year-over-year roll-off. And so there is a very large fundamental misunderstanding of what inflation is from retail and from investors. And the problem with that is, when people fundamentally misunderstand inflation, their pension fund managers and their hedge funds and their financial advisors position for their clients' desires. So you actually have this weird effect where people, of course, are tactically moving out of growth and innovation because that's what their clients are demanding, because of course inflation's never going to go away. But the reality is, it's a herd. Yeah, it's like the retail gets spooked. Now all the institutions freak out, which freaks out the retail more, which freaks out the institutions. It's all self-fulfilling. So you got to get that cycle happening in reverse, and that it's not going to be like the COVID pandemic. It's going to be slower.
Can I ask you a question? Yeah. So the difference between like the downturn with, you know, Japan, you know, not having enough, just a true real economy. They didn't like the growth there, and you're saying
lack
that
of babies being born.
Yes.
Whatever.
So do you think it's that? That's what I was going to go into. Do you think, like, you know, is that because of population trends? What do you? I mean, I know the population in the U.S., I mean, everywhere has been declining, but we still have relatively, you know, higher population levels, and I mean growth. We're still, I want to be clear, we're growing, but not as much as we used to. So I want to make that clear. The rate of growth is decreasing, yes. So
disinflating.
Yes, exactly. So what other factors do you think there are other than population, and also going into population? Is that just societal? Is that like, you know, values? What, like, I mean, this is like, you know, big macro stuff or whatever, right? But yeah, what do you think?
Yeah, so, well, eventually I think what'll happen is you'll actually have less of a fear of immigration. See, one of the big things now is, yes, we have a declining birth rate, but people are so worried about overpopulation. Oh, there are more cars, there's more traffic. But at the same time as we get more innovation around travel, like self-driving taxis, less parking lots, we actually catch up with constructing enough apartments over the next decade to 2 decades. We build enough supply of homes, and we have faster transportation, or we have jobs that can capitalize on being remote more. We're going to be less worried about overcrowding, and we're going to be more worried about, we have a labor shortage, and which we've already experienced now, but that's going to get worse.
Blue collar right now, right?
Yeah, exactly. You can catch up on that. But I think then you'll finally get, and I ran for governor on this idea that we need more legal immigration. The idea is just too early, right? The idea of more legal immigration is too soon. I'm a big fan of, we should have future schools where we actually invite people to come to America. We will educate them and put them in our workforce so they could be tradespeople, plumbers, carpenters, contractors, programmers, whatever. Now we actually provide much more economic growth, right? Every person getting a $100,000 salary is not just $100,000. First of all, it's probably somewhere around $150,000 because of workers' comp and taxes and all that. Well, that tax money goes somewhere, to more schools or whatever. Well, property taxes goes to that, but to more government services. The workers' comp goes to insurance companies, which then gets invested into, guess what? Real estate, which builds more housing. It's the velocity of money at work, right? Just more payrolls is literally the velocity of money. I'm a big fan of government policy doing whatever it needs to do to build growth and to drive economic growth, because that's politically positive. One of the things that you don't have in Japan that, in my opinion, the United States has, is that this is America and people want to live here from around the world. Not saying people don't want to live in Japan, but ask people in Japan, a lot of people would love the opportunity to pack everything and go to the United States. That's true around the world. And I'm not saying that's true for everybody, but I believe that in the vast majority of cases, you go to Germany, you go to France, you go to Italy, you go to Japan, China. I don't really care what country it is. People want to be in America. There's a reason we're the #1 economy. Now, again, I'm not saying everyone, but if we opened up the doors tomorrow and said anybody's allowed to come, I guarantee you we will double our population almost overnight because so many people would love to be here. Anyway, go ahead with the blue collars.
Oh, no, I just wanted to, no, I mean, exactly what you were saying, you know, there's shortage of labor. We're already starting to see that. I mean, you get into UBI and that type of thing, but with immigration, I totally agree. If you are able, like, there's nothing inherently wrong with immigration. I mean, America was founded on immigration, and that's why, I mean, arguably, you were saying...
Clarify, there are problems with immigration policy.
Yes, the way that, yes, yeah, the fundamental nature of immigration, there's nothing wrong with that. It's the way in which it's being handled and the way that, you know, the stigma, some stigma behind it, the way, that's being managed essentially, you know. I mean, if you can kind of think of the U.S. as, I mean, any country, it's kind of like a company essentially, right? And you need good management, right? You need to have that, you know, fundamental, I mean, ideals and values and not have biases. But anyway, sorry. With the blue collar thing, I go everywhere, but with the blue collar thing and the trade schools, essentially, as you're saying, wages will increase over time. But as we were talking about earlier, I mean, money it doesn't matter what the currency is. What matters is the goods and the services that, GDP.
We're growing.
Exactly. I mean, 200 years ago, standards of living have gone up for everybody. And that's because of capitalism. That's because of...
Yesterday.
Yes, we did. Yeah. And I mean, if you are able to bring in more blue collar or bring in anybody and be able to train them to, be white collar or blue collar, and you create value and it everybody grows. And I mean, yeah, so I totally agree with that. What do you think? Or
No, ask your question, Mike.
I don't remember.
Oh, no, it's fine. So, yeah, I mean, I wanted to touch on that because I interjected that yesterday. We talked about that idea about how in the 1940s, regarding the standard of living you're talking about, in the 1940s, you're lucky if you had one TV and one car. You were lucky, and that's because we saw so many neighborhoods built in the 40s. It's all one-car garages or no garage. And, now, even people in poverty, they've all got iPhones. Everybody's got a TV. Everybody's got a car. It could be an old car. It's a lot safer than it was in the 50s. A lot safer than it was even in the 70s. People always tell me in real estate, they're like, but Kevin, they don't build homes like they used to. And that's often because they think like, back in the 50s, we used redwood to build homes, which was like termite resistant out in California. That's true. That's great. But I'll tell you, the way we build homes today to code, not shoddy builder work because there are shoddy builders, but to code, 100 times better than the crap we built in the 50s. And that's because when you tear these down or you renovate these properties, you see what's behind the walls. You look behind the walls of a 50s home, which I've owned plenty of. Open it up, there's no insulation. You're looking right at the stucco, the other side of the stucco. You have almost no structural hardware. Hammered in nails, that's it. You look at a home now, you have insulation, you have foam sealant, you have sheathing and then stucco. You have structural hardware for earthquakes. These are things that you just didn't have 50 years ago. And of course, over degrees, over time, you've seen these slowly come in. But they make homes so insulatively tight today. I was talking, I think, to you the other day about how we actually have to bring in fresh air to new construction homes, right? I mean, you have a hole in a new construction property, usually next to the return on the second story, but goes through the attic, and it just brings in fresh air from the outside because the homes are built so insulatively tight, which is so much more high quality than the leaky homes that you used to have in really up to the 2000s, where they started getting a little bit more airtight. So all of that, by the way, contributing not just to the standard of living, but also to, in the longer term, disinflationary pressures. That technology is reducing. I mean, we can have a more comfortable home, enabling us to do more productive work and be more productive at home while spending less money. Because you're spending less on air conditioning, because you're keeping more of it inside, so you're spending less on energy. Now you have more to spend on something else. Maybe that's an investment into your business or an employee, and now you grow the economy even more. So the standard of living thing, a lot of people today say, everything's worse today than it was then. It's so much better. So much better. Yeah, please.
Yeah, no, Yes, sorry. Sorry. I have I think I have a good question. I mean, so we agree. I mean, the essence of what you just said is the standards of living have gone up, and that's a great thing, and I think we all agree with that. Exactly, and that's what I wanted to get into. And that value is, I mean, envy essentially, right? Because I mean, and this is how I wanted to kind of relate. Like, out of all the successful people you've met, like, do you think that it's that of envy or that of something else? Because out of everybody, I've never seen the people who I admire most don't really bag on others. They at least look at the good side and they see what they can value from. So I mean, I kind of look at like the whole capitalist, and I don't want to get too whatever political or whatever, but like essentially, if you don't, the thing stopping from continued standards of living is going up. I mean, even like, I mean, communism, you know, during the 20th century was, I mean, do you think that fundamental factor, that value is envy? I mean, what is that the difference? Because people yes, or we're all like, is it the fact that simply, even if our standards have gone up, some people just don't like the fact that, you know, there's a difference in standards among individuals in the entire society. I mean, what do you, and do you want to go, Kevin, or?
Yeah, so there are two things here. One is, well, actually there are three things. One is just straight up inflation. Well, we look at the cost of milk now compared to what it was in the 70s. Obviously, everything's much more expensive. But of course, incomes are higher. And that does drive a higher standard of living. Now, that doesn't mean there's not poverty today. That doesn't mean there aren't people who are struggling today. And there are probably more opportunities today than there ever have been. The fact that you can download university lectures from, as we were talking about the other day, MIT, Harvard, Stanford. What do you want to learn? Programming. You want to learn neural nets and artificial intelligence? Free, online. I mean, these are incredible opportunities to learn and really build your resume or build your ability to succeed. One of the things I tell folks is, you want to be a productive worker, you want to get paid more money, figure out how to provide more value. And then I see them typing on a keyboard and they're like this. And I'm thinking to myself, you're typing 20 words a minute. Is somebody next to you typing 100 words per minute, 5x is your output. This is something where I think we get to the second problem of encouraging folks to realize the best way to build wealth and make more money is providing more value. And the more you teach yourself about being able to provide more value, the more efficient you become yourself, the more you get. So it always starts with, what do you give? And then you get more. And in America, unfortunately, we have the opposite mentality. The mentality is, what can you give me? And then I will work harder for you. That's the wrong way. And that, I think, is why most folks get trapped into the idea or the problem of paycheck to paycheckism, so to speak. Because it's always, what can I take? And then I'll think about working harder, but then you really don't. And you always have that misaligned, jaded element. And that's where the envy comes in, sort of the third part of, oh, well, they're the rich capitalist. They owe me more. A lot of people have that owe me attitude. And so I think when somebody who probably is watching this video who wants to get ahead is able to look and say, yes, things are more expensive now than they used to be. Inflation has a lot to do with that. Yes, the dollar has lost purchasing power. This is why we don't sit around holding cash all the time. We hold assets over the long term. We buy real estate, we buy stocks, so that we preserve our purchasing power. But then when we also switch our mindset from one of envy and switch it to, well, let me give. Now all of a sudden envy starts going away. What can I give of value? And then, oh my gosh, the more I give, the luckier I get. And the harder I work, the luckier I get. All of a sudden, the world changes for people. So there are always going to be folks upset with the idea of capitalism because, of course, it's easier to just say, hey, here's $400 a week on unemployment. And what a surprise. People got $400 a week of unemployment. Nobody wanted to work. Of course not. It was like the best UBI experiment ever. Don't get me wrong. I think there are, for certain demos, there is a case for UBI. Mentally ill, age, look, a 14-year-old who has no parents needs to be supported. An 80-year-old who can't work needs to be supported. This is why we have social safety nets. Somebody who's, fallen off, like somebody we met, the paraplegic, and he's an inspiration from yesterday. But working as a lineman, falls off and becomes a paraplegic for 10 years, wheelchair for 10 years, paraplegic, I think, for 2 of those. Either way, those people need to be supported. But for anyone capable, there's so many opportunities today. The opportunities are so much better than ever before. Do you want to add anything? Yeah, go ahead.
So you were talking about how adding value it's like a give and then take relationship, right? And that's how it's supposed to be. That also benefits like the actual individual who's giving. Like if you're working harder for somebody else, you're going to learn a skill that inadvertently ends up helping you in the long term, and probably makes that person be like, hey, this person's going out of his way, going above and beyond for me, so I should give him more. So it's like a double-edged sword in that regard.
In a good way.
Which, yeah.
That is in a good way if you do the work.
Yeah,
if you don't, yeah. But McKay, why don't you chime in on this? I think you'd have an interesting perspective. So the idea of what experiences have you gained in that? How many weeks have you been working here, counting today as your last? What have you learned over the last few months?
I think over the last few months, interacting with people, and more than anything, Kevin has really emphasized that we underestimate how much we can do personally. So if you don't know how to do something, don't pay someone to do it, learn it yourself. Like, you can create so much value with what you can give, that don't go pay some attorney to do some small paper and pay them like, what did we pay, like $200 an hour, when you can write that document yourself watch a couple YouTube videos and figure it out, and you just did it, and you created that much more value for the company that you're in. So instead of like going to your boss and be like, hey, can you help me with this? Or like, hey, can you do this for me? Find a way to do it and create that value within yourself. And then Kevin frequently says the first time doing something is always the most difficult. So the next time your boss says, hey, I need this paperwork again, you already know how to do it. You know how to fill out a DocuSign. You know how to do everything. So instead of deferring to someone else or giving it to somebody else's responsibility, you want the responsibility. Kevin often says you get paid, the more difficult problems you solve, the more you get paid. Like, that's just how business is. If you can figure out how to make a bad house into a good house, you're going to be rewarded for that. You're going to have to put hard work in. The first time is going to be the most difficult, but then the more houses you do after that, the more value you create, and it gets easier and easier every time you do it, and you learn more and more. So like these trips, it's a learning experience all along the way. Yesterday we had a great learning experience. We learned a lot about areas that we didn't know about, and we learned exactly what House Hack is looking for, some things that House Hack wants to stay away from, but we're also learning a lot about the people that we're going to work with. So it's really important to, Kevin frequently says real estate's all about the people. And so he talked about, no, we're not doing Zoom calls, is because when we want to be like, if Joe from Arkansas calls us, he's like, hey, I just found this great property. We found a very similar property when he came down to visit us. We know Joe, we trust Joe, we know he wants the best interest for House Hack. That's why you can't get that over Zoom, right? This is business, handshake, eye to eye. And so those two things is really, one, how much value can you create? Meaning how many problems can you solve on your own? And two, the relationships you can create with people, you will go miles and miles ahead of the competition that are just doing Zoom meetings. Oh, are you free now? No, like, we're gonna fly, we're gonna come see you, we're gonna take you out to dinner. That chemistry is invaluable. You cannot pay for chemistry. So those two things is creating chemistry with other people and just finding how much value you can create. Those are like some of the two biggest things that I've learned.
Nice. There are two things that you said that were kind of really inspiring and motivating. But one of them had to do with, you said, you solve harder problems, you're going to get paid more. Like, it's the hardest the first time. The truth is, like, growth and discomfort, it's the same thing. It's the literal exact same feeling. So anytime you feel like this is scary, this is new, I don't know if I could do it, that's the thing that you should be pursuing, because that's the only way you're basically going to grow. The other thing is, I know a lot of people, they feel like luck is a huge element, and luck is an element. Like, there's no denying that. You could be the hardest worker in the world and just be in the wrong place at the wrong time, and vice versa.
You get shot.
And you get shot.
You're dead.
You get shot.
Down. No, don't say it.
Knock on wood. Knock on wood. I don't think it's a coincidence that the hardest workers tend to be the luckiest people. I don't think that's a coincidence. I think it's the people that put themselves out there, try to provide value for other people, just the people who are go-getters. They inherently put themselves in more opportunity. They get more of those opportunities. So yes, luck is an element, and it's kind of a wild card. But again, I don't think it's a coincidence that some of the hardest workers end up being some of the luckiest people.
I think what Mikey said is 100% correct. And one of the reasons that Kevin is as successful as he is, it's not because every project he does is a home run. It's because when he knows something doesn't work, he cuts it and moves on. He calls it flip-flopping. But in reality, that's his greatest superpower, is because he may be like, all right, market open, market close. Okay, that's not helping the business. I can be more valuable doing something else for the business. Okay, I miss market open, market close. He changes things quickly, and if it doesn't work, he doesn't do it, and he finds things that work. So if it's not creating more value for the companies, he's not gonna do it. So again, flip-flopping is Kevin's greatest superpower, And he makes fun of himself for it, but in reality, it's when he flip-flops, it's usually for the better. It's usually something better comes out of it than his original idea. So don't be afraid to flip-flop. Don't think it's like you told your family that you're going to do this and this, but something better came over. Don't go like, yes, your word's important, but ideas and opportunities arise. And like Mikey said, the harder you work, the luckier you get. Those things go hand in hand for sure.
So this morning I was really inspired actually listening to your story. You told me that you started a business at age 19. I was just wondering if you could share that in how you developed relationships over time. I know you had a relationship with Peloton. So I mean, this guy, if you could give some advice, because I mean, you are a business owner, you are an entrepreneur, and just overall, your thoughts on what you've heard.
Yeah, well, I mean, every angle, get my good side at least. So yeah, I mean, honestly, the whole idea of being in the right place at the right time, hardworking people tend to get luckier. I was just happened to be really young when an opportunity presented itself. It wasn't like I was actively looking for it. I was offered a job by a relative. I went to go work, and it just so happened they were firing everybody as I was starting. And so they were restructuring, and they told everybody, hey, look, so we're going to be letting everybody go. However, we're going to be hiring contractors. So if you're interested in starting a business, we'd be happy to hire some of you back on. However, you would be your own contractor. And that was an opportunity. I was pretty young, but even I knew it was like, hey, I mean, this is better than not having a job. So I asked a couple questions. They pointed me in the right direction, told me how to start a company. I didn't know anything about starting a company, but they gave me the right info. I started it up, and it was extremely difficult, going little by little. And that kind of just led me from one place to another, going into the business. And eventually I was able to hire people on to help me and grow it from there. And so that initially we started with a small furniture company and grew our way from there. And I'm sure Kevin would enjoy this. We did, over the pandemic, work with Peloton. We were the ones doing all their deliveries and everything. So that was fun.
So you would do the assembly then? Not that there's much assembly, but you did that too?
Yeah, so we did all of their white glove service. That was something that we were able to work on with them, which was really fun. We were able to grow our business and do everything from there. And I really think that, like you said, it's just kind of learning how to provide value. And that's just kind of how you can grow a business, or you can grow yourself personally. There's a lot of resources online. Like you said, nowadays you could just go on YouTube, find out a lot of information. I never would have got into real estate, I think, if I had not seen a Meet Kevin video, to be honest. So it's just gathering that information, seeing what's valuable and applying it, and it's not always going to work right away. People get so hung up on like, okay, I'm going to try it, it fails, and it might not work right away, but you just got to kind of try again, persevere, do it again. But there's just so many resources nowadays that you can tap into. Like just the other day I was on Twitter and I heard about something called, it's Chat GPT, I think. Man,
small little startup.
I downloaded it onto my computer and I typed a few things in, and the responses I was getting were like so crazy, and the information I got from that was so crazy. So, I mean, I see people on Twitter now like doing whole threads on like, hey, I can help you make money with this new tool, So it's just really what you look into and the value you get from things,
That's awesome. Yeah, thank you for that. Yeah, and I want to add a little bit of clarity to McKay's line there about the lawyer. I really like that. I just want to clarify, McKay is not doing all of our contracts. But what McKay's referring to is actually a really good point. So what I like doing is we have a lot of creative things that go on. So for example, when we started the shadowing experience, we thought, okay, well, we should hire or retain an attorney. Well, I could hire or retain an attorney to draft the whole shadowing experience document, but they're 6 weeks out because they're starting from scratch, and they're going to charge me a lot of money to do that. So what did we do? We wrote it and then said, all right, now that we've written the outline, can you go through and now read it? So we gave them probably 5 hours of a head start. That saves money, but it also gets your own wheels turning of how do attorneys think. And then when you get that revision back, you go, oh, that was a good ad from the attorney. Now the next time you go do the prep, you're doing more. And so every time we go through back and forth with negotiations with attorneys, the more we can contribute, the more we actually reduce costs and we increase operating leverage. So it's a great example. And it also it comes down to real estate contracts as well. A lot of real estate contracts need legalese that in non-attorney states, you just don't have an attorney for immediately. So us as real estate brokers, we need to be able to write contracts very, very quickly and efficiently. But the more I work with attorneys, the better I get. The more I do it, the better I get. And the better I get, the more value I can provide at any job I ever have in the future. So it's kind of incredible. And then the chemistry thing, what I thought was neat is when I was buying this plane, when I was first buying it, the seller was super skeptical. Like there's no 30-year-old that's coming to buy my $13 million plane. No, that it did not want to do the deal because of fear that this person's not going to perform and then I'm going to lose an end of the year sale. And when I met him in person and I told him I wanted to buy his plane,
He's like, definitely not happening.
Definitely not happening. No, yeah. And we had negotiated on the price beforehand, but I shook his hand and said, I look forward to closing the deal with you. And after he shook my hand, he looked at me and said, you know, I'm not going to fly the plane now anymore. I'm not going to put any more hours on it. I'm going to keep it safe for you here. We're going to fill it up. I'm going to pay for a whole... And he's adding these things on that it didn't originally agree to add on. And he's just showering me with this. And I think it was the difference of being in person. Kind of like what we were talking about with that Zoom situation for real estate. I've seen that a lot in real estate deals where sellers initially, all these buyers, all these greedy buyers are liars, right? Then they meet the buyers, they meet the couple, they meet the person in person. They're like, no, I would love to do the deal with them. In fact, I'll take less money if I could do the deal with those people because I trust them, I believe them, I shook their hand. Real estate's an in-person game. So, well, does anybody else want to add anything? Given that now we are descending, it is time to wrap up the Mile High podcast. Does anybody else have any final comments? Do our pilots have any comments?
We're working.
So?
They're adding value. They're adding value. We're busy. Just throw it on autopilot.
Yeah. Press the auto land button. We are about to go into the calls. Yeah. Well, with that said, thank you so much for watching the first episode of the Mile High podcast. If you'd like to see more of this, make sure to leave some support down below because if you don't, we won't. Thanks so much. Bye.